It is May the 27th, 2022. We are back. I had a week off last week because of DLD. I've been away 2 weeks, Keith, and I come back and the whole economy's crashed. What's going on, Mike? Didn't you look after things properly?
Exactly. All my fault, especially inflation. I bought a new car and paid too much for it. So
What, another new car, or is this the other?
I actually bought another one because we are now a 4-driver family, and 2 cars and 4 drivers is when 2 of them are teenagers means the parents don't have a car anymore. So I did buy another one, yeah.
Which one did you buy?
I bought, I'm embarrassed to admit, an electric Mercedes EQS AMG 53.
Why are you embarrassed to admit it? Because they're expensive?
They are expensive, and I feel like I spent more on a car than any human being really should. But
over 100,000.
I think we're on a public show. I shouldn't really disclose.
Well, I guess we can check the price. But did you pay over the odds?
I did pay over the odds, as you might expect.
Well, someone's got money, Keith. I don't think anyone else in the world. How come you have all this money?
Well, I work in venture capital, which, as we're about to find out on this show, is doing quite well.
Is it?
It is.
So what has the trickle down impact of the collapse of the economy, has it reached venture yet or not? Or will it reach venture?
Well, so I did. You remember we always talk about how venture is really 3 different businesses, and the seed bit of it is unique. So what I did this week is I decided to go and do some research. So my editorial has actually got real data in it. I went to Crunchbase and I did a query, and I used what at Singular Rank we call the GP Rank 100. It's the top 100 seed investors scored by how good they are at investing in unicorns. And I looked at what's happened this year with just those top 100, and looked at just the pre-seed, the seed, and the A rounds. And this is month by month. So peak was February, 313 rounds, with the total amount raised was 3.53 billion. And in May, as of yesterday, 181 rounds with 1.65 billion. So roughly 50% of the money for about 2/3 of the companies. But the amount invested per company was roughly the same. 6 million per round was the median. So, you can see a decline month by month. Red and pink are bad, green is good. But remarkably...
Yeah, and the interesting comparison actually would be, say, comparing May 2022 with May 2021 or May 2020. I bet it's still probably more in some ways, isn't it?
Yeah, I can actually, just to show that we're live and this is all very real, if I click on this query here, and I've got to change what I'm sharing to reflect it. Here we go. So now I'm sharing the right thing. If we do between 4/26/2021 and 5/26/2021, that literally will be the previous year. What we get is 245.
So it's a bit more, but not that much more.
But 4 billion invested. So 245, 4 billion.
But which sectors is it sort of agnostic in terms of which sectors are being affected by this?
Yeah, because the way GP Rank works is it doesn't look at industries. We can actually slice and dice it by industry sectors at Singular Rank, but this doesn't do that. It's just looking horizontally across the best seed investors and A round investors, and looking how much money they put to work per company and how many companies. So it's looking at aggregate trends. If you go back to the query and you look at the names of the firms, and this is now the new query, so that's no good. I've got to do this month, 2022, search again. What we do is we get 50 results, and we can add in. Are we doing a thing for Crunchbase here, aren't we? Description. There we go. So we now got the description of the company. Maternal delivery platform, a fintech company, another fintech, a payment B2B company. You can get the idea. Embedded customer credit, creating, publishing, and scaling mobile games. Undo Finance, another fintech. Machine intelligence. So it's AI, fintech, some biology.
So nothing that different.
Nothing that different.
So let's stand back, Keith. Stand back from all your data. What exactly is going on here?
What we're seeing is a move to quality by seed investors. So they're doing less deals. When they find one, they're investing roughly the same amount they invested before. We don't know what they're getting for that in terms of their ownership share, but probably they're getting more of the company than they got before.
Yeah. So the prices have come down.
Prices have come down. They're putting the same amount of money to work, owning more. It's interesting. I'm doing a panel at Super Returns in a couple of weeks, and the panelists met on a Zoom call, and they were all investors. They were giddy happy with this correction. They were all rubbing their hands together saying this is going to be their best year yet in terms of what they can buy and how much they got to pay for it. So there's this duality, they're all speaking as if they're almost apologizing to entrepreneurs for how bad things are going to get. And
well, stuff was overpriced before, right?
Well, overpriced compared to today, but price is a function of supply and demand. So arguably it wasn't overpriced according to the supply and demand, but compared to today, clearly, yes, it was.
And how are entrepreneurs holding up? I mean, you're interesting because you're both an entrepreneur and in this business.
Yeah. Well, so I'm out raising money right now. SignalRank has had a fantastic first quarter. We've got 35 seed fund partners. We have 81 companies that fit our profile for investing. And the demand for our money is about $200 million in the next 9 months. That 200 million has a future value somewhere between 1.5 and 7.5 billion. So it's like I'm going out saying I want to sell you 200 million that's going to turn into 7.5 billion, or at the low end 1.5. We're getting lots of meetings and lots of interested discussions, but I anticipate it being hard to get the check written.
Well, that's always the case, isn't it?
Yeah, it is. So
what advice? So for entrepreneurs, startup entrepreneurs watching, and you have some interesting pieces in the newsletter this week by entrepreneurs who have been through these down cycles before. What advice would you give?
Well, the main advice is to stick to your knitting. In your world, nothing really has changed. Substack's a great example of this. Substack, and I don't know if it was leaked or announced, but yesterday it came out that they have stopped raising money.
Yeah, I saw that.
100 million. So, is Substack a worse company today than it was 2 months ago? No, absolutely not. It may even be more important because more people are going to want to try and make money by being creators. But its previous valuation was 600 million. And its revenue last year was apparently, if the rumors are true, 9 million. Well, in today's world, 9 million isn't worth 600 million in value. 9 million is worth about 100 million in value. So they're only 1/6 of what they were worth before, but it's the same company, maybe even with better prospects because they've got money.
The cliche is that the great companies are founded in these periods. I mean, obviously, Google comes to mind in particular. Founded in 90s, it came into real being after the dot-com boom. Which sectors do you think are ready to really take advantage of this downturn? What are the areas that people should be looking at? Is it at DLD? There was a ton of startups focused on carbon emissions, on the environment, but I'm not sure if all of them are even for profit.
Well, look, I think climate change is a ways off in the future. So I think anyone that invests in climate change, it's a bit like investing in deep tech, where there's still research and development going on, and you don't know if there'll be a product. So I would advise caution on climate change, even though it's a massive human need, and really, something has to be really awesome to attract capital. Anything to do with data and artificial intelligence, especially if it's connected to fintech, is very high. I think the transformation of the motor industry is real, and we'll still get lots of investment. I think remote work and all the tools associated with remote work and making teams efficient, even though they're not all in the office, there's lots of stuff that will happen there. So batteries, next generation batteries, a bit deep tech and maybe a bit R&D-ish, but there are some real things.
Boring too. Yeah, Mike, our old friend Mike Bookcher, who may be watching, he when I saw him, he said he watched this show and sends you his best. He did a panel at DLD on Web3, and for Mike was pretty critical. He doesn't seem to think it's for real.
Yeah, well, Mike is an English curmudgeon, like someone else.
Well, less of a curmudgeon than someone else I can think of. I mean, he usually is a bit more generous. He had a VC who seemed completely clueless, and an entrepreneur who was perhaps even more clueless. I mean, in all this radical downturn, Keith, this utopian Web3 stuff is going to it's going to be the first thing people cross off their list, isn't it?
Yeah, actually, it's one of my essays of the week this week is from Barron's, and it's about this. It says Web3 was supposed to save the internet. It has a long way to go. It's actually a good essay. And look, I, as you know, I certainly believe that something new is being created in Web3. And timing is hard, but there are already real things that real people are doing on it, mainly surrounding banking and savings. Despite the Luna crash and the Terra crash, that is real.
Well, the Luna crash was just a scam, right?
I don't think it was a scam. The guy who started Luna has just got backing from Coinbase and Binance.
This is the Korean guy, or am I thinking of another one?
Yeah, the Korean guy, Kwok. And he's now launching Luna 2 with backing from all those people.
Well, I'm not sure if Coinbase is much more viable than Luna, is it?
I think they're all viable because they're trading platforms for assets that a lot of people want. So they're going to make money from trading alone. I mean, Coinbase's market cap, even after the correction, is still fabulous. I can tell you what it is right now if you want. Coinbase's market cap is still up there. Funny enough, it's not in my list anymore. Why is that?
Probably gone bust since you.
No, it'll.
And what about Keith? I know that this week one of your pieces.
16 billion, by the way, Andrew. 16 billion.
Yeah, but it was worth what, 200 or 300, a couple of $100 billion.
This
time last week.
Still, if we do 6 months. The stock price was at 319. It's now at 75. So it's a quarter. It's a quarter of what it was.
Which is probably par for the course. What about the Andreessen news that they've raised a huge new fund? Where are they going to put their money?
Well, that is part of the Web3 narrative. They've raised a $4.5 billion crypto fund. So that's a small part of what they do as a firm. Here it is on Axios. And they are market makers in crypto. So there's lots of activity with smart people doing lots of things, and Andreessen is the first port of call, and they will invest in the smartest and the best with the most likely future outcomes. And the typical, just to give you a sense of this, and not so much you as the listeners, the typical A round investment that is made today will be worth sometimes thousands X what the current value is by the time we get through 5 or 6 years. I've got a spreadsheet here that will blow you away. This spreadsheet is a post-correction spreadsheet. Let me just pull it up in the window that we're sharing, and then we'll be able to see it. This spreadsheet is looking at Datadog, for example, which has taken a big hammering. This is the BCD IPO, the 52-week high, and the current valuation. And these numbers, the numbers are the multiple of the B round. So if you invested at the B round, you got to 838 times your money, and you're still at 411 times your money. This is Cloudflare. B round, you got to 700 times your money. You're now at just around 200. Peloton, which has taken a huge hammering, B round to current is 93 times your money still.
And some companies Tesla are even coming out of this stronger. Stripe, for example, aren't they?
Yeah. But the point I'm making is, if you're in early stage venture, this correction is, you may be 90% down from the peak, but you're still 100 times up from when you made your investment.
Yeah, although what you fail to acknowledge is that, or what you miss is that a lot of your investments in that round, they will have all gone bust. So it's not like everyone you invest in is going to go up. No,
that's true. But typically you invest somewhere between 1% and 5% of your fund in a single company. If it's 100x, you're somewhere between 100% and 500% of your fund.
So where are we in the cycle, Keith, here? It's still got a sort of, it's still got to travel through the system, this, I don't know whether you call it a recession, a downturn.
Smarter people than me can't answer that question, so I'm not going to pretend I can. I think we're not at the end, I'll say that. Although the stock market went up 3 days in a row the last 3 days, and significantly up the last 3 days. Apparently the month of May end up being green on the Dow as opposed to red, which would be quite something. So some people are calling the bottom already. I think because of the war in Ukraine and the macroeconomic situation with inflation and interest rates, that's a brave call. So I'm myself thinking a year from now we'll know the answer. I don't think we'll know it in the next few months.
Well, we've got to my favorite bit of the show, two favorite bits. First, startup of the week, Keith.
Yeah, so startup of the week is a company that has raised $37 million Series B funding. It's a metaverse startup, so thought that would be kind of fun, in Singapore. It's called Bud, and Sequoia India, which is actually, funnily enough, based in Singapore, are the investor. And along with a bunch of others, including some Chinese investors. So newsworthy because it's Sequoia, newsworthy because it's the metaverse. But for me, the reason I put it in here is $37 million at the B round is almost exactly the median B round currently. So this company is symbolic of the asset class that I'm obsessed with, which is companies doing their B round.
What does it say about the metaverse?
So it says that the metaverse is considered real by smart people. Again, smart people get things wrong, so we'll see. So what they do is it's the largest user-generated content platform in the world. So in the metaverse, you can create a digital Andrew, and you can create a digital anything, and you can sell it, as we know, using NFTs. So this company creates a platform for normal people to create digital assets for use in the metaverse. It was one of the top 10 social apps in 38 countries.
Wow. And finally, Keith, even when things are down, we still have a tweet of the week.
We do indeed. Tweet of the week is from John Gannon. John Gannon is in venture, somebody I follow. And he's tweeting someone else's tweet on the creator economy business model and what is needed to make them work. The tweet underneath is saying, I just don't see how the business model is sustainable. And they're talking about subscription-based content from people like you and me. So I like this because I think we can talk about it. You and me both, get paid.
Yeah, but you're not. I mean, I'm not really. You're certainly not. You're an entrepreneur. You just do this for fun.
Correct. But that's a choice. If I had to do it to make money, I think I'd be worried.
You'd be more than worried. You've always been a bit more bullish on the creator economy. Have you lost confidence in it?
No, I think the opposite. I do this thing with Steve Gilmore, the Gilmore guy. And yesterday, Steve's been driving me nuts for the last month, trying to help him do something that he wants to do. And yesterday we did it. And what it is we did what you and me are doing now, except we embedded the stream inside a Substack newsletter. And he could email his Substack live newsletter to all his subscribers, and they could see us doing this live in the newsletter.
That's pretty cool.
Yeah. And so you start to think, wow, Steve always comes up with amazing things. Last time it was he came up with the attention economy many years ago, and talked about the value of attention. And it reminded me when I was when I did EasyNet and then did Real Names, we came up with the click economy. We sold keywords that got clicked on before Google was even selling ads that were clicks. Steve came up with the attention economy. Now he's coming up with subscriptions are worth paying for if you can get access to the people live. And I think there might be something in that.
So what happens? You send the newsletter out. Does it have text in it, or is it just real-time video streamed on your Substack?
It's real-time video streamed on your Substack, but it can have text and people can comment.
What's the difference between that and streaming on Twitter or LinkedIn or Facebook?
Well, because you've got a subscription paywall in Substack, and so you can create thresholds of engagement that people might pay for. And it's $9 a month, let's say $100 a year. If you got 1,000 people, if you have content that 1,000 people would pay for, you're halfway towards a Palo Alto salary, and you're 2 times.
What's the Palo Alto salary, Keith?
Palo Alto salary is probably around 200 to 300K a year.
That means that's the minimum to survive.
That's the minimum. For what it's worth, I get paid a lot less than that at SignalRank.
I should hope so.
It's my company.
And finally, Keith, finally, we haven't said anything about you know who and you know what. Twitter and Elon. What's going on there?
I think we haven't said anything because it's so murky. We don't really know what's going on. He clearly, during our absence, he clearly threw the gauntlet down and said there's no way he's paying the price. He didn't really say this, but that is what he was saying. He was saying there's no way he's paying the price that he originally said he would. And Twitter's stock price today is at $40, which is well below the 54 that he offered, but it's above the $32 it was at a couple of days ago. So it went way low.
Well, hopefully by next week we will have resolution on that. By next week, perhaps we'll have a little bit more clarity on where the market is going. But have a wonderful week, everyone, and we will talk to you next week.
We will. Thank you, Andrew.